It is time to look at Q3 earnings from the largest stock in the stock market. That, of course, is Apple, ticker symbol AAPL. What is going on, investors? Hopefully, guys are doing well out there. Earnings season's got a big one today, and that was Apple earnings, which came out after the bell. We'll go through them for you. We'll take a look at the revenue. We'll take a look at how that compared to expectations. We'll obviously look at iPhone, Macintosh, iPad, Wearables, and that all-important service revenue over at Apple. We'll take a look at some comments that Tim Cook made on the conference call, which quite frankly kind of apply to a lot of different companies. That's why when we look at Apple, they're so steady from meeting their expectations. It's such a well-covered company. You rarely get any surprises from Apple, at least from a financial and a fundamental perspective. So when you get comments from Tim Cook, you can apply that to other companies because Apple is such a large part of not only the stock market, but economies in general. That is because they had nearly $83 billion worth of revenue, not for the whole year, not for 10 years. We're talking about in 3 months. That's nearly $1 billion a day in revenue. We'll obviously walk through you the entire financials over at Apple. And then we've got to talk about this one from a technical perspective. This one is not far from all-time highs, which are up here in about the $180 range. We're currently sitting in the after hours, up about $5 on this one to 162. We'll talk about this one from a technical perspective. Now, some of the things that we were watching before Apple announced their earnings was continued Macintosh strength. And some of you might be wondering, why is that like the first thing that I'm looking for with Apple? Because look, when we roll down to their products, they have a market dominant position in iPhone. They have a market dominant position in tablets like iPads. They have a pretty dominant market position when it's talking about headphones and to a lesser degree, home and accessories. They have a very, very strong and fast growing services business, which is clearly tied into all of this. I think you probably understand where I'm going with this. The one segment that Apple doesn't necessarily have a dominant position for is actually Macintosh computers. They have a much smaller share of the market versus the total PC market, and certainly compared to personal computers that run on Windows devices. So I'm always looking for strength in Mac, because if that can keep accelerating, well, you've got a recipe for success over at Apple. We're looking for that services growth. We're looking for buyback usage. I'll show you that when we get over to the cash flows over at Apple. I'll show you how many shares they bought back. We'll get some supply chain insight. You bet you. Tim Cook, that's exactly what I was referring to on the conference call. Very promising news there. And then we'll also discuss margins to a certain degree, because as you're probably aware, this company went to essentially a 100% in-house silicon design, at least from the operating system chip, across the entire lineup, as this company was using Intel for especially the PC units for decades. And while it'd be lovely to get some unexpected news on the conference call about an autonomous vehicle and other product plans, like maybe that AR VR device that Apple has supposedly in the work, and maybe confirmation that they got these NFL Sunday ticket rights, we can always dream. Apple keeps things pretty close to the vest. Now, those revenues came in at $82.96 billion. That was up just fractionally year over year by about 2%. That was in line with expectations, basically right on the dot. This company is very, very well covered by the analysts, as you'd expect a company of this size and this magnitude. For the upcoming Q4 quarter over at Apple, you have expectations from Wall Street coming in at about $90 billion. On the high end, some analysts think they'll get close to $98.8 billion. On the low end, closer to about $85 billion. That would represent the midpoint of those estimates, which gets you about 8% growth year over year in Q4. I think more importantly with Apple is really the Q1. So this is after you see a little bit of launch selling of the new phone devices, typically launched sometime in Q4, but you typically get the revenue recognition in Q1. You're expecting just 4.6% growth. I think that's probably the upside for Apple. We'll certainly talk about it from a technical perspective. What's it going to take for Apple to push to all-time highs? And quite frankly, if Apple pushes over and above all-time highs, you're believing basically the entire stock market or a very broad range of stocks probably going to go up as well, because as Apple goes up, it'll pull a lot of stocks up there with it. I think the upside with Apple is they release some really, really nice products that everybody, quote unquote, has to have in Q1 of their fiscal year, and you drive higher than 4.6% revenue growth in that most recent quarter. We'll certainly see impacts of that when we get news of Apple's newest product releases down the road. Now, I did want to point out on the conference call, Tim Cook made some interesting points. He said that Apple saw supply constraints that were less than anticipated than at the start of the quarter. He's really referring to that third quarter, which is key for Apple to kind of build up their supply chain and build up the shipments of those hot iPhones and new products that they'll ship in Q4 to all the consumers here in the United States and around the world. So this is good news, and it could potentially in the future have analysts start at least reaffirming, potentially bumping up their fiscal Q1 guidance over at Apple, which again is the holiday shopping season. We also saw the CFO confirm that the company was expecting gross profit margin between 41.5% and 42.5%. That certainly supports some inflation, some supply chain issues as well, but it also supports the fact that this company has shifted to 100% in-house silicon design, which certainly will expand their margins when in the past they had to pass some of that margin down to companies like Intel. Now, let's jump into these Q3 numbers. Fiscal Q3 over at Apple, we had that $83 billion. Last year on that revenue side, you had 81.4. I think the more important thing is dissect how this growth happened. Notice on the product side, you went up from just 63.9, roughly $64 billion. You actually went down on the product side. It's almost basically flat from a rounding perspective, but down marginally on that product side. That actually is comforting to me as an investor, because they more than made up with that with service revenue. And then when I show you the margins, the gross margins on this service business, you actually want this to continue to accelerate. And that's exactly what happened. You went from $17.5 billion up to $19.6 billion, up nearly $2.2 billion on that service size. And when you notice that you went up by about $2.2 billion on that net service revenue, look where your service cost of sales, it barely budged. It went from about $5.3 billion up to just $5.6. So as you see this increase by $1 billion, $2 billion, a ton of that money is just flowing down through to gross margins. And so here's where you see evidence of that. Our net sales went up, and so does our gross margin as well. So from $35.3 billion up to about $35.9, nearly $36 billion on that gross margin side. That gives you a ton of money. I don't care what business you're operating. Well, you got operating expenses. So in R&D, what I noticed over at Apple, really interesting. So this actually accelerated quite a bit from 5.7 all the way up to 6.7. They're working on something over at Apple, and I think that goes without saying, but this is a pretty large acceleration. Again, we are comparing a comparable period where they're designing a new phone back here. Now, I know that they're coming out with a larger iteration on the new phone. The last phone was just kind of a refresh, so to speak. So it could be some of that, but we could be seeing autonomous car spending here. We could be seeing an acceleration of the AR, VR glasses and those types of things. You see for the last 9 months as well, you're still seeing that acceleration by over $3.3 billion from 16.1 to 19.5, considering Apple's track record of releasing $100 billion type products. The fact that they're increasing their research and development fees really has me excited as an investor what they might have to offer here in the coming years ahead. Now, selling, general, and administrative fees, those didn't budge that much, so we didn't really see across the board. That's why I'm really excited about this R&D acceleration of spend. That certainly, I think, means Apple is up to something. It could be a combination of things. It could be the AR device, could be the car, could be both. 5.4 billion up to just 6 billion on that selling and general administrative side. So our total operating expenses not up much, okay, from 11.1 up to 12.8. So we saw some increases on that net sales side, saw a little bit of increase on the gross margin, saw a pretty steep acceleration on R&D that's going to impact your operating income, but basically flat year over year from 24 billion down to about $23.1 billion. I'll take less operating profit when the vast majority of the money got poured into R&D. Again, not on a startup, not on some company that hasn't proven itself. We are talking about the biggest company in the world spending money on R&D at a rate we haven't quite seen, at least in a comparable period. So I love that. I will give up operating income. I will give up some things in order to get that. We earned about $1.20 diluted. It's a little bit misleading. We don't typically come down to earnings per share over at Apple. Not that they're not spectacular, but they're doing a massive buyback over here. And so that certainly will boost up EPS in the shorter term. Now, in terms of their different business segments, in terms of geography, you had America, that ticked up a little bit. You had Europe, surprisingly to me, ticked up nicely. We see Greater China. This is surprising to me as well. That country in this quarter that Apple is recognizing here had major shutdowns. So consumers clearly still got their fix in Apple, although it's down slightly year over year. Japan is where you had actually the biggest drop off from $6.4 billion down to about $5.4 billion in sales. I'm seeing that with other companies that I'm looking at, but you have the rest of APAC picking up a little bit of slack, going from $5.4 billion up to $6.2 billion in net revenue. And then finally, net sales by category. iPhone just continuing its strength, $40 billion every quarter on that. Even 9 months, 12 months after the launch of the product, it's just unbelievable. I talked about how I really look at Macintosh sales because this is the one segment where they don't necessarily have a dominant position in the market. It went down from $8.2 to $7.4 billion worth of sales. Apple had a major refresh of their laptops and desktops over the last year. And certainly if you're like me and you bought one of those first iterations, there really is absolutely no reason to upgrade for the vast majority of users out there. So it's possible we see weakness in the Mac business as a lot of customers waited for that in-house silicon to hit over at Apple on the MacBook Pros and the Mac desktop computers. That refresh cycle for the M2 chip that was just released, probably in my opinion going to be a little bit slower. You still have really strong iPad numbers from 7.4, essentially flat, down a little bit to 7.2. And then finally you have wearables and home and accessories. These are your AirPods and those types of things from 8.7 down to about 8. Again, somewhat expected as you head into the next 2 quarters where Apple will likely refresh almost all of these devices. Customers, especially tech-savvy ones, will take a pause before they buy, but then it was mostly made up by the service revenues. Again, went from 17.5 up over 2 billion to 19.6. When we come down here to the balance sheet, this will look about as good as you'll ever see a balance sheet look. We've seen some cash leave, at least the current side of cash. Apple is interesting. They have a current balance of cash up here, which sits at about $47 billion, but they also have non-current cash down here, which is these marketable securities. My guess is they have to hold these because, quite frankly, the company has $94 billion worth of debt. Even though the banks probably trust Apple, they want this set aside in a non-current account. They have an extra $131 billion worth of marketable securities over at Apple. All things being considered, we did see some cash flow out of here. I'll show you when we get to cash flows where it went, but I do want to show you all important inventories. It's just unbelievable to me that this company has just $5.4 billion worth of revenue, and in the quarter they have $83 billion worth of sales. And if you want to just break that down to stuff that they actually have to stock, they had $63 billion worth of sales in the quarter and just $5.4 billion of inventory when they take the snapshot of that at the end of the quarter. It's just amazing, and it is a testament to Tim Cook having a background there and clearly knowing what he's doing, but also hiring people that are clearly executing on his expertise. It's just unbelievable. I know they're running into a new product cycle, so they're dwindling down inventory probably as it is, but it's just remarkable over at Apple. On the liability side, you do have a mountain of debt, but again, that is offset by marketable securities. This company is borrowing essentially this term debt at a extremely low interest rate, and they're buying back the stock, which if you stretch the stock back back to a 1-year time period, you're up 8.4% on every Apple share that you bought back. The company borrows money at like a 2% rate to buy stock, which over the last year is up 8.5%, and over the last 5 years is up 323%. So it is a trade-off every single company would do. And again, if you follow that up with operational and product excellence that Apple does, it's a very, very good use of debt, and that's what Apple use it for. Now, all important cash flows. The company pulls down $79 billion. When you come down here to cash flows, this is through a 9-month period. You get to add back in things like stock-based compensation, depreciation, and amortization. And while those are up, especially stock-based compensation is up year over year, you can look past that despite the flat revenue growth, despite somewhat deteriorating profits. $98 billion over the last 9 months. That is incredibly impressive. In fact, last year, we thought $83.8 billion was impressive. They've bolted on another $15 billion over the last 9 months, essentially $3 billion a quarter on that operating cash flow side. Again, in a difficult environment where they're pulling down just another $5 billion worth of net income year over year, they bolt on an extra $15 billion in that positive cash flow. Now, we pull down another interesting number here in terms of property, plant, and equipment over the last 9 months. Last year, we're sitting at about $7.8 billion. This year, down a little bit to 7.4. So when we talked about earlier, the fact that they spent money on R&D, looks like to me, a lot of that is going into software development, going into stock-based compensation to retain and keep the best employees. Not a lot of it is flowing into the actual property, plant, and equipment to develop those products. I like what I see with Apple. Certainly a company like this, if they can keep rolling out products to its legion of fans, it will be beneficial to shareholders. Now, speaking of beneficial to shareholders, the repurchase of common stock over at Apple in the most recent 9-month period, we had over $65 billion or nearly $65 billion worth of common stock repurchase. Last year, sitting a little bit higher at about $66 billion, all things being considered. The buyback pace essentially equal over at Apple. You paid about $11 billion worth of dividends. You paid a small amount in debt, but all things being considered, we did decrease cash over the last 9 months by the tune of about $7 billion. Again, a lot of that had to go on the operating side to R&D development. And then from the cash flow side, a lot of that went into share-based buybacks, repayments of debt, and dividends. That's exactly what you want. If you are an investor in Apple, you want them to research and develop new products since they already have a slate of award-winning products, and you also want them to pay dividends and buy back the stock. Now, in the after hours, we're popping. It's not that big, but we're popping up here a little bit. We went from 157 in the after hours up about 3% or about $5 up here to 161. In the intermediate term with Apple, I see a stock essentially going sideways. Over almost a 2-year period, we've been trading between 114 and the high end up here at about 180, but I think you could shrink this all the way down here. The vast majority of candles over at Apple over the last 2 years have been between 114 and 115. So we're at the top of this range. What would it take for Apple to really burst back up here to the all-time highs? Simply momentum in the stock market. If it continues in this direction, a stock like Apple will likely get bought up and continue to churn higher. You obviously have a cycle of new product announcements coming down the pike when it comes to a new phone and likely other products that certainly could benefit Apple. I don't necessarily think I'd be a buyer back at the all-time highs over at Apple, but quite frankly, if you get rejected at these price levels, the areas where I would buy this aren't that much lower. So if you're just starting your Apple position, I wouldn't necessarily blame an investor for taking shots at these, what I believe to be elevated prices. But if you get any kind of pullback, there should be support for the stock about $20 lower, back down here at about 140. Obviously, the 52-week lows are closer to about 130. If the market really reverses, and this is just kind of a dead cat bounce or a bear market rally that we're having with stocks, and we end up breaking through the June lows that most stocks made back here in the middle of June, if we do break through that, there's some areas lower down here at about 115 with Apple, which again is kind of the bottom end of our sideways consolidation. I think the best news for long-term investors would to have stocks start chopping sideways for a period of time. This will allow you to accumulate these on the dips, and then when we start a new bull market phase, this one will break to the upside again over 180 and start a new sideways consolidation kind of uptrend at a higher level, probably between 180, 190 up to 220 on Apple. That will take more revenues, more products, more R&D, better supply chain margins and clarity over at Apple. And I think if we start looking 1 year, 2 years down the road with Apple, inflationary pressures on this stock and recessionary fears here from consumers in the United States and around the world will likely be resolved. And if they can update this portfolio of products with a couple more that generate these types of revenue on a quarterly basis, let alone home run type products like the iPhone and certainly the service business has been, well, then Apple stock probably going much, much, much higher in the future. I continue to hold this stock. I don't even think about selling this one. You continue to accumulate this stock on any weakness and any dips because these types of results are hard to find. Hopefully, guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.